Yeah, awesome. So what I'll do is, first of all, few transactions I have actually written. I want all of us to do the journal entry very simply, one by one. For one entry says charge interest on loan 10% on rupees 3,000. So the transaction is charge interest on loan 10% on 3,000. What are the two aspects in it? So here, let me clarify, we are charging interest, and definitely nothing is mentioned about cash. So cash is not received yet because we are charging interest basically. What are the two aspects? Anybody?
Loan, no?
Loan account.
Uh-huh.
Is it bank?
Okay.
Interest account or bank account?
Okay. Anything else?
No.
Okay, fine.
Account?
Sorry, come again?
Cash account.
Cash, okay. All right. Fine, we'll go ahead with it. We'll finalize two of the most important aspects in it. First one, the cash. Let's figure out cash. Like I said, cash we have not received yet because the transaction very clearly mentions charged interest on loan. It does not say received interest on loan. And so because of that, cash has not been received. So the language was new. That's why I clarified from the beginning itself, the cash we have not received. So because we have not received cash, so cash is not getting affected. That is not one of the aspects. I'm deleting that. Let me come back to loan, bank, and interest. So here, if you see charge interest on loan, meaning thereby we are actually charging interest, meaning thereby we have given the loan. We have given, our company has given a loan to somebody, some person. So bank is not involved here at all. So basically we have given a loan to somebody else, and bank is not involved. Only for that reason I'm deleting the bank part. Let me go to interest part. Interest is actually correct. So because interest is being charged, so interest is a kind of income here for us because we are charging interest. Because we are charging interest, that is an income for us, and that is one of the aspects. I get that. Now loan, actually, even if it's there, but are we receiving loan or are we paying loan here in this transaction? Anyone can answer that? Are we receiving loan or are we paying loan in this transaction?
No.
No, we are not dealing with loan. We are rather dealing with interest on loan. That I get, but loan is not getting affected at all. So loan is not the aspect here. One more aspect is there, which is what the person who is going to pay us the interest. The person who is going to pay us the interest. So it might be Mr. A, B, C. Instead of saying that, we give him another name called interest receivable. Just like accounts receivable or trade receivable, just like that we have interest receivable, just another name for the person from whom we are going to receive the interest. Is that clear, the two aspects? Anyone? Is that clear, or any doubt in that?
Clear.
Interest receivable is the person who pays interest, right?
Yes.
Instead of telling like Ram's account, like that.
Yes,
and,
exactly.
And interest?
Exactly. Interest is your interest, no? It's an income for you. So that is one of the aspects, isn't it?
Okay.
Because you are receiving the interest, you are charging
like
interest,
yeah,
you are receiving interest. That's an income for you, isn't it? So you are earning income basically.
Okay, so first one is.
Yes.
Okay, so first one is like their first one is like who are paying us. Second one is what we receive.
Yes, exactly. What we earn, I would say, because we have not received yet. That's good enough. Now let's go to what are the types of accounts. Interest receivable is personal, real, or nominal?
Nominal.
Personal.
It represents the persons. It represents the persons So the first question itself, is it a person? Answer should be yes, right?
Yes, yes. Sorry, sorry. It's a
Yeah.
personal.
So personal account. Interest is a
Nominal.
nominal. That is correct.
Okay.
Personal account, debit the receiver, credit the giver. Then are those persons receiving or giving the service?
Giving.
No. Loan service. Are they receiving or giving?
They're receiving.
They're receiving, no? Loan service, they're receiving. That's why they're paying us the interest, right?
Correct, correct.
Yeah.
Yeah, but
So,
interest they are paying us, no?
Yeah, interest they're paying. So again, interest we have not received yet. Interest is just earned. Today the interest is due. They have not paid yet, right? So they have not paid yet. The day in which they'll pay, that day they'll be actually credit. I get that point. Do you get my point?
Okay.
The day they'll pay, no?
Yes, but still if
they'll
we
be given.
mention interest,
Mhm.
okay.
So the difference is,
So if we mention interest, then that means that is an amount that they should give.
yes, that is an amount that they should give. They have not given yet. That they have not given yet. So they are not a giver yet. That is important. On the day it is due, when they have not paid, they are not yet the giver. So until today, they are the receiver of the loan service, receiver of the loan. So because the interest, why the interest is being charged to them? Because they have received some service. What is that service? Loan service. What is that loan service? We have given some money to them, right?
Okay.
Yeah. Had I said after that another transaction that this person paid us the interest, this person paid us the interest on that day or for that transaction, they would be the giver. Does that make sense?
Okay, got it.
Yeah. So here it is a receiver, so meaning thereby debit, and interest, the nominal account. What are the rules?
Debit the expenses and losses, credit the income and gain.
Incomes and gains. Interest is an income or expense here?
Gain.
Income.
Income, definitely income. So credit. So we know the entry now, which is nothing but interest receivable account debit, interest receivable account debit to interest account. The amount is 10% of 3,000, which is nothing but 300. Make sense?
Yeah.
Yeah. And then let's quickly go to the next transaction, which is depreciation on furniture at the rate of 10% of this. Depreciation on furniture at the rate of 10% of this. I think depreciation I have discussed before, right? The concept of depreciation. Anyone can tell me what is a depreciation?
Its original value
I
reduces.
can't recall.
Okay. No, so original value reduces. That's actually correct. So the reason is, so I'll tell you like this. Depreciation is wear and tear of an asset. What is that? So when you purchase an asset, be it a phone, be it a laptop, the value that it possesses on the first day, will the value be same after 1 year? The phone, does it operate the exactly same way after 1 year?
No.
So obviously by the time, over the period of a lot of use, the value decreases, right? I can say that is safe enough to say.
Yeah, correct.
Yeah. So in business terms, what happens is whenever a lot of machineries are there, building is there, furnitures are there, whatever type of asset a business uses, over the period of time, their value decreases. So that value decrease is very important for the business. That is because during that period, whatever income you made, whatever income you made is by using those assets, right?
Yeah. Got it.
So meaning thereby, whatever decrease happened during that period, whatever decrease that happened during that period is an expense only for earning that income. Whatever use that you made, the use that you made during the period of the assets is actually making you earn that much of money. So that should be considered as an expense for earning that income. Is that safe enough to say? Does that make sense?
Understood.
Yeah. So that is called depreciation. Depreciation is nothing but wear and tear of the asset. Whatever you have used during the period, fix some money for that, fix an amount for that, and charge it as an expense. Why is it an expense? Because you are using the assets to earn income. So whatever value of decrease that has happened to the assets is actually called the depreciation only. Does that make sense?
Yeah, got it.
Now the question is how to determine the wear and tear. How do we determine how much of use have we done? That's a complicated decision. But what happens is, for us, it has been made very easy. Every question will have the percentage and the value of the asset. We will just have to multiply those two values and determine the amount of depreciation. So it is very clear that depreciation is an expense, and it is very clear it is happening to some asset, right? It must be happening to an asset. Having that said, let me come back to this. On this day, we have decided that depreciation on furniture is 10% of the asset value, which is 7,250. Now, my question to you, what are the two aspects?
Furniture account.
Okay. And one more.
Expense
Cash
account.
account.
Yeah, somebody said expense. And
Sorry,
anything else?
I just joined now. I have no idea what you guys talked till now.
Okay, Thomas, no problem. So what we have been doing is we have been just preparing journal entries for few transactions. The first transaction we have already recorded, second one we are doing. Just from that you can pick, and the rest of it you can go through the video once we actually, I share it with you. Just a transaction, name of the transaction I have given, and then we are posting the journal entry. That's all we have done. Here we are discussing about depreciation of furniture, and I was actually talking about what is a depreciation. Depreciation is nothing but wear and tear of asset. Over the period of use of a particular asset, its value decreases. So the amount of decrease is nothing but depreciation. So because we have used the furniture from the beginning of the year to the end of the year, so the value of the furniture is decreasing by certain amount of money. So that decrease is called depreciation. Now we are trying to find out what are the aspects of that transaction. So we have determined furniture, one is cash, one is expense. Anyone else? Anything else? Okay, I'll take this up. Now let's focus on the cash. Do you think cash is going out or coming in this transaction? Let me ask you this question. You purchase a phone today, and after 1 year, you said the value will not be same after 1 year. So when you are deciding, how much of value has decreased, value of decrease in the phone, do you think on that day, any cash is going out or coming in?
Literally, no.
No, it's not. Literally, no. Yeah, definitely cash is not going out or coming in. Then it's definitely not an aspect in this transaction. It would have gone out the day in which you purchased the furniture, or in our example, the phone. But that day you would have recorded a separate entry for it. You're not going to focus on that entry. We are just focusing on today's transaction. What is happening? We have decided that depreciation is 10% of the amount of the furniture. Now that we have decided that, these two are actually correct. However, this expense, I will name it as depreciation instead of expense. The type is expense only. So the aspect is depreciation. Depreciation is what? Is an expense only. If that makes sense, I'll go ahead with what are the types of accounts. Sorry, yeah. Furniture is a?
Real account.
Yes, perfect. And depreciation is a?
Nominal.
Nominal account, yes. And real account, what are the rules? Somebody?
Debit what comes in,
Debit
credit
what
what
comes in.
goes out.
Yes. Here furniture is coming in or going out?
It's not going out, right? Is it? Not, is it
It is
something
not
happening?
going out. You are absolutely right. It is not going out. I can say a portion of the depreciation, portion of the furniture has reduced, has elapsed, I can say, isn't it? So you
Yes.
can say it's a form of going out. It's not literally going out. It's a form of going out. Definitely the value has decreased, meaning thereby a part of it has definitely gone. I mean, something has happened to it and we have lost something. Is it safe to say? So not literally it has gone
Uh,
out, but we can
so
say it is,
will
yes.
depreciation will be calculated yearly or only when we are selling a furniture, or it's just an
Yearly,
amount which we
yearly.
will
It's
just like that
legally
we will
required.
calculate.
It's legally required to calculate it yearly basis, on a yearly basis. However, we have the option. Every company has the option to calculate it on quarterly basis as well. Even in fact, some companies have seen to calculate it in monthly basis. But legally, you are required to calculate it on yearly basis. Yes.
Okay, okay.
Yeah. To show the correct picture, correct value of the asset, we have to do that. Now, furniture, does that make sense? Even though it is not actually going out, but we are definitely losing something. So something is definitely going out of work, going out from us, right? A part of it, a part of the furniture, isn't it?
Yes.
Yeah. So I can say it is actually going out in a sense, and I'll say it as a credit. Now, depreciation, nominal account, what are the rules?
Debit all expenses and losses, credit all incomes and
Credit
gains.
or incomes and gains. Depreciation is expense or income here?
Expense.
Expense.
Perfect. Debit. So the entry is depreciation account debit to furniture. Any doubt in these two entries, guys? So the amount will be 10% of 7,250, which is nothing but 725. Any doubts, guys? Okay.
No.
All right. Let's go to bad debt of 500. Let's go to bad debt of 500. So I had introduced the concept of bad debt yesterday. Let me just repeat that in case you guys have forgotten, might
One
have
second,
forgotten.
Dheeraj. So what we're doing is the question that we left off yesterday, like first the question that we figured out which side it was going on, and under
Yeah.
that the adjustments, we are just making journal entries for those adjustments. That's what you're doing
No,
right now,
no,
right?
no, 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 no. I have not said that. I'm introducing these as just normal transactions. I haven't said these as adjustments. I have not introduced the concept of adjustments yet. So what
Okay,
I'm
okay,
planning
okay.
to do is,
So this is not how you answer a question like that. It's not, you
no,
don't
no,
make
no,
journal
no,
entries.
no, 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 no,
Okay,
no,
okay,
no,
got it, got it,
no,
got it,
no,
got it.
no.
Okay, yeah, you can continue.
Uh,
Now it's okay. No problem.
yeah,
Just
yeah,
continue.
yeah. So we are now going to bad debts. Bad debts, the concept was when we have a debtor. So who is a debtor from whom we have to receive some money. And on a particular day, we decided that, we are not going to receive any money from that guy. So better to actually write him off. I'll just give you a simple example. Suppose we are a wholesale shop, very small local wholesale shop. Now, whenever somebody comes and takes some material, some household stuff from us, we just receive the cash and give him the whatever product they desire. So some people out of them, they come to us and they ask us, tell us that, what, I need some this and that, but I cannot pay you today. After 10 days or after a month, I'll pay you. So we have a simple register in which we write the name of their name of those people. Does that make sense? So we are a wholesale shop, and whoever is taking goods or products from us on credit, we have a simple register in which we maintain the name of the person, and right next to it we write down the name, amount of money, right? So just imagine this situation. There is a person whose name is suppose Lakshman, and the amount mentioned next to his name is suppose 5,000 rupees. So in the list of the people from whom we have to receive money, the name of Lakshman is there, and right next to his name 5,000 rupees is there. Then we get to know from people around that one day Lakshman has been vanished. So he went somewhere, nobody can find him. He has taken this much of money from this guy, this much of money from that guy. Everyone is looking for him, but he's vanished. He's gone somewhere. So on that day, what do you think we will do? Anyone? What do you think we will do? We will retain the register as is, or we will do something with it?
We will cancel out the entry and mark it as something that we will not get back.
Yeah. So we'll simply, from wholesale perspective, they don't really maintain that big complicated accounts or something like that. What they do is they strike off the name, right? They strike off the name and strike off the amount. Does that make sense?
Yeah.
Now, that striking off, does that mean that we have received the money? No. We have accepted that we are not going to receive the money. That's what has happened. So we have assumed that we have received the money. Can I say that?
Yes. So it's a
So
loss.
basically, yes, it's actually loss, and we are striking off his name, even though he has not paid the money. Still, we are striking off because we are saying, it's actually loss. Whatever we sold to him is actually everything goes to loss. Now, once I have told that, let me come back to this example, which says bad debt of 500. Now, what has happened with this company is there was this one customer who took some product from the company of 500 rupees. Now, the company has realized that it is not going to realize that amount. Now, it is not a simple register that is maintained for the company. Now, here we are maintaining proper books. We pass the journal entries. Now, let's talk about what are the two aspects in it. Can somebody please point out? I had already discussed this yesterday, but I'd like to discuss it today as well, because I felt like we need that more discussion on the bad debt side. The two aspects in this transaction.
Cash.
Okay.
I mean, bad debt account.
Okay. Bad debt is one. Anyone else?
And the person who took the debt.
Perfect. The person who took the debt. Can I write down his name? Debtor.
Yeah.
Yes,
Anyone else?
take out cash. I meant what I meant by cash was bad.
Perfect.
Debt,
yeah. Perfect. Those are the actually two major accounts. Those are the two aspects only. Let's drop out what are the types of accounts. Debtor is what type of account?
Personal.
Personal. And bad debt is
Nominal account.
perfect. Nominal account. It's expense only, no? Nominal account. Perfect. So you can also go through that whenever you are finding any difficulty in types of accounts. You can say those rules. Bad debt. Let's go to bad debts. Is it a person? No. Is it a entity? No. Is it a representative personal account? No. Is it something that we can feel and touch? No. Definitely not. Then it's a nominal account. Now let's talk about debtor. The personal account rules are
debit receiver, credit giver.
credit the giver. So here are we? Is the debtor receiver? Sorry, is the debtor receiving or giving?
Giving? No.
He's
So,
receiving money from us. I mean, the goods. He's receiving goods from us for free.
Not today, right? He received the goods on the day of the
He's
sale.
hypothetically giving money.
Yes, exactly. He's
Oh
hypothetically
yeah.
giving. Yes. So I think there are only 10 minutes to the recording. So once it's done, please join in the same link. I'll come back and we'll just resume wherever will be left out.
Sure.
So, okay, because I just received the 10 minutes pop-up. Okay, yes. I'll just continue with that. So we are hypothetically receiving that. The reason is we want to strike off his name, just like that wholesaler. We want to strike off his name. So we are assuming that we have received. So as he is a giver, now I'm putting in credit. Let's go back to go to bad debt nominal account. What are the rules? Now I'm asking every time the rules so that you guys revise it a lot of time. I know you are not able to practice. So the more the times you will revise, even with me also, some part of it.
Thank you so much. This really helps.
Yeah, it helps actually. Debit the expense, credit the income.
Gains. And here bad debt is expense or income?
Expense.
So it is a debit. Perfect. So the definite entry is bad debt account debit. Bad debt account debit to debtor. Amount is 500. Let's come to this entry. I'll introduce some certain things here. Let me do that. Then only we'll go to the aspects. Provision for bad debt to be maintained 5% of this much. So yesterday also I discussed something about the provision for bad debt. I discussed something about provision for bad debt. So the Yesterday I actually included both the concepts bad debt and provision together. So the reason for that was I wanted to actually introduce bad debt very simply first. Then I wanted to talk more about what is a provision, what is a bad debt, and what are the difference between those two. So imagine this, okay? For a business who is running like a big business, who has like lakhs of customers. My question to you is, can they focus on each and every customer and say, you know what, this person cannot give us money, this person cannot give us money, this person cannot give us money, and see how much of money they owe and total them? Can they do that? Or is it little difficult? They can do that, I would say, but it's a little difficult, and it'll take a lot of time of the accounts department to do that, in which time they can actually go for another simpler way. What they can do is they can see the past history. They can see the past history and say, you know what, for the last 5 years, what we have seen is whatever data that we have on this day, 5% or 10% of that goes bad. So probably 5% of it we don't receive. So, or maybe 2% or 1%, as the case may be, whatever is the historical data available to them, accordingly, they can decide on a percentage. So on a particular day, what they say is, this is not final. Remember this is not final. They're just assuming stuff. They're just making expecting that this might happen, expecting that this might happen. So that is what is the concept of provision is. Provision name will come a lot of times while we are dealing with the accounts paper. The name of the provision is associated with only expectation. Suppose we are expecting that this expense will happen. Suppose we are expecting that we have to pay this much of money after 10 days, 11 days, 12 days. Then we are going to create a provision for it. Why do we create a provision? So that our books will show the correct picture. The profit will not be inflated. Very simple reason. So what I'm trying to say is, even though we know out of the 1 lakh customers, no one, we cannot figure out, person by person, this person has done bad, this person has done bad. We cannot do that. But we know, because of the historical data, some people out of them will actually turn bad and we will not receive the money. If we know that, we have to make some adjustments, right? We have to pass an entry for that. Do you think? Do you think that on that day, we should pass an entry just like we passed an entry for bad debt? We are absolutely sure. We are absolutely sure approximately 5% of our debtors will go bad. Then we should make the entry for it, right? However, because we do not know who are they, so we call it a provision. So provision is directly linked with expectation. So when you are expecting that an expense will happen, then the name of the provision comes in. So what I can say is, in this transaction, which reads provision for bad debt to be maintained 5% of 49,700, with the whole concept I just introduced, why the maintained is there. So 49,700 is nothing but the debtors balance. So of that, 5% we are expecting not to receive. 5% we are expecting not to receive. So that hypothetical part in which in the last transaction it was debtor, instead of, because we cannot determine who are they, so we are not directly hitting the debtor here. We are not hitting the directly debtor here. Instead, what we will say, let's create another liability or contra asset named as provision for bad debt. Similarly, you will have to deal with afterwards provision for salary, provision for rent, provision for this, provision for that, who are nothing but representing the debtor only, or representing the rent receiver only, representing the salary receiver only. Does that make sense? But because we are expecting, because the transaction is not yet happened, something, we are just passing the entry because of the past trend, we are deciding that this might happen. There is a chance this happened. We have an expectation that this expense will occur. Because of that, we are creating a provision instead of directly hitting the debtors. Does that make sense?
So is that also a personal account?
Yes, exactly. Because that is just another name for the debtor that we give.
Got it.
Yeah. Let me go back to the transaction now. Now I have very clearly and repeatedly I said one of the accounts is provision for bad debt. So that is one of the aspects. What is the other aspect in this transaction?
Bad debt account.
Exactly. So the bad debt is the one. No, bad debt is the one. Debtor we cannot determine, right? We cannot determine, out of them who are the people who.
Yeah, and
who
provision
not-
for bad debt is actually replacing the debtor, right?
Yes, that is just another name for the debtor. Yes, exactly.
So if you
So-
see bad debt, we just need to put two accounts all the time. That is, one is debtor and the other one is bad debt. Now, if you see provision for bad debt, you need to just change that a bit by adding provision, but the rest is everything is the same.
Exactly same. Yes. In fact, the analysis is also same. The way we pass the entry is also same. Let's see that. Bad debt is what type of account? We have already determined the top is a nominal account, right?
Nominal.
And we have already determined provision for bad debt is a personal account. Now let's go to nominal account. What are the rules?
Debit the expenses, credit the income.
Here bad debt is expense or income?
It's expense.
Expense.
Perfect. This is debit. Provision for bad debt personal account. What are the rules?
Debit receiver, credit giver.
Here here the debtors are not the giver, but if you remember the concept, hypothetically they have given us
Assuming them as
because
giver.
we are striking off their name. Yes, correct. So because they are giver, we are now crediting that. Now the entry is bad debt account debit to provision for bad debt. So so what happens is this bad debt concept and provision for concept is a little bit tricky, which is exactly why you tend to understand right now. After the session, you will forget that. I please do practice. Only by practice you can remember what is really happening there. But as many times
Is
as
there
possible,
is there any question where, like, when they give both bad debt and provision for bad debt, we won't use this same, like what you explained right now? No, is this always the case,
yes,
or
yes,
is there
this
a
already-
situation where it can change?
No, it won't change. It will remain exactly.
This
the
is
same.
always the same. When you see bad debt
Yes.
or provision for bad debt, immediately we need to just understand this is the journal entry for that.
Yes, absolutely. Yes, that should be the understanding. Yes, correct. Is that clear, guys? Please do practice as many times as possible. I'll repeat, but if you practice really on your own, that will be even better. That way you remember things even more clearly. Anyways, let's go back to 5% of 49,700. So I'll apply the formula into 5%, which is 2485. Yeah. Any doubts until now, guys?
No.
Okay. I'll go to the next transaction. Next transaction says goods costing 1,500 rupees destroyed by fire. Goods costing 1,500 rupees destroyed by fire. What are the entries? Sorry, what are the aspects?
Goods.
Sales.
I mean, yeah.
Okay. Somebody
Sales.
said sales. Somebody said goods.
No goods. Sales.
Okay. Anything else?